Ladies and gentlemen, welcome to Investment Matters with Peter Kinch and Diversify Alternative Investments. Today, I'm absolutely thrilled to have with me Chess Hagen. Chess is the CEO of AP Capital Mortgage Investment Corporation. That's Mortgage Investment Corporation. The acronym is MIC, AP MIC. And this MIC is a mortgage fund that handles upwards of $140 million of investment capital lent out in mortgages. So I always find it's fascinating. A lot of people are not familiar with this segment of the market. And this is an area, again, that can scare some people, can confuse some people. Maybe explain a little bit more about that specific space and exactly what a MIC is.
Sure. So the MIC entity was introduced by the government of Canada in the late 70s, but there was apparently a gap in the marketplace in terms of available lenders, and they wanted to introduce a new form of mortgage lending. What we really are today, if you fast forward 4 years, is we fill a niche in the market that the big banks and the big credit unions and so on do not fill, and that is short-term lending. Short-term lending to somebody that has a more immediate need that maybe isn't a fit with the bank, and that could be for a whole host of reasons. And because we're short-term lenders, we therefore charge higher interest rates. If you look at what a bank or a credit union or a monoline trust company offers, they're offering a mortgage that you pay off over 25, 30 years. So they're collecting interest for all those years. Whereas we're in the Mortgage Investment Corporation space, we're in the shorter term window, oftentimes 1 year, maybe up to a couple of years. At AP Capital MIC, we only offer 1 year term mortgages. So we're offering them at higher interest rates because of that shorter window of time that the money is out.
So again, how does the investor get a return? What happens there? So you've got a combination of first and second mortgages. They can be different interest rates. How does the money actually come back to the investor from an investor's perspective?
We're lending out at a weighted average interest rate, kind of in the mid sevens. We'll call it 7.5% approximately. Those rates are starting to edge upwards, but we're kind of in that interest rate environment right now, which I would say is the lowest we've seen for this type of niche lending in well over a decade. So if we're lending out at 7.5%, we take a management fee for running the business of 1.5%. So just simple math, 7.5 minus 1.5, you're down to 6. There's a few extra costs to run the business, but really that 1.5 is to operate our business, which is a separate management company. So really, you knock off a few more basis points, and we get to sort of the high fives in terms of interest, in terms of return to the investor. As you know, we're sitting here today, we're getting lots of news in the market about rising interest rates next year. We'll see that weighted average interest rate start to head towards 8.5 over the course of coming quarters, and that will then expected to realize in higher yield to investors.
AP's been able to pay out their dividend every month without skipping a beat for almost 12 consecutive years. What would you attribute that success to, Jess?
Well, I mean, I think that the real estate market in Canada has shown just an incredible resilience over the course of many decades. Canadians are keen to purchase a home or rent a home and live in it. And so as a lender in this market, we're looking at those elements and saying, hey, this is a very stable asset class. It has been historically. We truly believe that it will be going forward. And so we're looking at the value of a home and saying, okay, we're willing to lend up to, say, 70% of its value. And by doing so, we feel very strongly that the monthly payments will come in. And in the event of challenging borrowers, we will get our capital back because we have a court system in this country that enforces people's payment requirements. And so the whole model of just look at Canadian banks. They've been strong performers over many, many decades as well. So really at the end of the day, I think it's a combination of a very strong asset class in residential real estate and a culture in Canada where people make their mortgage payments.
Tell me, from your perspective, what do you see as the biggest headwinds or risks associated for a potential investor investing into your MIC?
Well, I think that if I look at what the composition of our current shareholders are, the 1,300 people we are custodians of their invested capital, from the $10,000 TFSA up to those families with $5-10 million, is that they actually believe in real estate, right? And so I think an investor needs to have a core belief that this asset class called real estate in Canada is a good one, and they feel confident and comfortable with it. Because to me, the risk of this investment is that we are advancing debt, mortgages, against the security being a home or a piece of real estate. So if there's a dramatic erosion and decline in the value of that home, and we've placed debt on that home, then we're putting that debt at risk if house prices were to decline dramatically in a short period of time.
Well, that's, I mean, when I do get people worried about risk or concern, they say, well, what if the entire market collapses? And I often say, well, if AP is lending out its average of 60% loan to value and it collapses beyond that, we probably have other issues and other problems. But so you touched on the risk. The last question I want to ask is a combination of why AP Capital on one hand, but also where do you see the opportunities when you, as the CEO of AP Capital Mortgage Investment Corporation, look out to 2022 and beyond?
Well, we see an opportunity just of consistently growing the book of business, increasing that diversification so that we, when an investor comes into our fund, that they know that their money is spread widely across residential real estate, because we see this market as being one that, even though it's maybe, between, it's single digit percentages of the total residential market, we see that as still being a very substantial market size in this country. So I mentioned earlier that across Canada, the MIC space is somewhere between that sort of 13 and 15 billion dollars. We see plenty of room for AP Capital to continue to grow into that. And our investors will then receive that, diversification of a larger pool of funds spread across a larger number of mortgages. So if anything, I think we'll be more of a disciplined lender in the future, and just continually focusing on consistency of delivering results.
Chess, thanks very much. It was great talking to you today.
Thanks, Peter.
Okay, you take care. We'll talk soon.